What's going on, everybody? So this is going to be a little bit of a different style video, even though I do have some charts that are pulled up on my screen here. I kind of want to, take a minute and talk to you guys about a topic that I think a lot of you guys deal with. And, we've all kind of been there. So this is a second attempt at this video. The first attempt, the video ended up being like 16 minutes. I got all the way done. I uploaded it to YouTube, and then, I tried to play it back and my audio was off. So here we are shooting this video again for the second time. Hopefully everything is good on this. I checked the audio, everything looks good. So let me just fix this screen here. Why does this look a little wacky? Okay, so what I want to talk about is boredom trades versus being bored. Okay, so I want you to really think about that for a second, because at one point in time or another, we've all taken boredom trades. I know I did this a lot when I first started trading, my first year, 2 years. I've been trading full time now for 5 years. It's going on 5.5 years. And I really didn't get the concept of what the difference was between being bored or, trading is boring versus boredom trades. I kind of just, mixed it all together. And, the difference is that a lot of times, depending on what indicators you use, depending on what style of trader you are, depending on, where you're getting your information from, how you're building your watch list, this, that, and the other, there comes a point in the time where the bell rings, the market is open, stocks are moving higher, stocks are moving lower, and you're sitting there and, nothing is really confirming. Even though things are going up, it's really not in that sweet spot where you want to buy. Sometimes, you're looking at consolidation, red bar, bigger drop. However, it's resting over support, and, 1 hour passes, 2 hour passes. Next thing you know, it's lunchtime. And you're kind of looking at the charts and you're like, you know what? I am bored. I like this stock. I've been watching this stock. I'll just take Microsoft, for example, since it's pulled up on my screen. I've been watching Microsoft. It's been on a 2-3 day run up here. It's not really in my sweet spot, but you know what? Let's give it a go. Okay. I like this green bar candle here. I'm going to jump in on this green bar. Next thing you know, boom, you get smacked in the face, pulls back on you. 1, 2, 3 points, and now it's underneath the supply, and you're wondering, man, you're thinking to yourself, why did I just get in that trade? Why did I take that trade? Okay. So the difference that I want you to, what I want you guys to understand is trading is very, very boring. Okay. If you're doing it correctly, it's the most boring thing probably out there besides, I don't know. You guys drop me a comment. What else is a boring profession? But trading has to probably be up there in the top 1, 2, 3, 4 professions where it is extremely boring. But, and there's a but. The but is that if trading wasn't boring, okay, if everybody was just a renegade and you're buying at any price level, and you can consistently for example, I can short the stock here and I know that it's going here. I could buy the stock here and I know that it's going up. If you could do that, everybody would be a multimillionaire. Okay. But that's just not the case. So what I mean by that is that if you have a strategy, if you've been trading the markets for a while, even if you're just, a beginner, but let's say you use moving average indicators, or you use the MACD, or you use, a combination of VWAP and the 9 EMA, or you use live option flow with price action, candlesticks, so forth and so forth. Whatever it is that you use, trading can be extremely boring because day in and day out, minute by minute, hour by hour, depending on your trading style, whether you're a scalper, swing trader, day trader, whatever it is, you are doing the same thing over and over and over and over. So with that being said, okay, if I am buying a stock on weakness, now this is an example of a stock trade that I took today on Microsoft. Okay, pre-market here, we started to get a little bit of a ramp up towards the 20 period moving average. As soon as the bell rung and the market was open, we had this nice big spike here, topped price at 303.35. Immediately started to backtrace. Okay. Based on my watch list, on my due diligence, on the homework that I done the night before, I was already looking to be pretty sell biased on Microsoft. Not for, the world's coming to an end, stocks going to zero, but I was looking for 1, 2, 3 point move, maybe back testing support to the downside. What I was looking for here is a strong red bar, okay, which we got at the 7 o'clock candle, okay, a strong red bar that was going to at least take out 1 to 2 prior candles. Okay, so you can see here at 7 o'clock, not only did we take out the 6 a.m. pre-market candle as well as the 5 a.m. pre-market candle here. This was my entry in here, 302.55. Okay, at 302.55, I was going to get in this stock, and my rule of thumb on to take profits is the first and second push after your initial buy-in. So if I was to buy in here at 302.53, and then we get this first and second push after the buy-in candle here, you want to be taking profits here or here, because at any time, it could sort of snap back. And in this case, it snapped back 1, 2, 3 on the fourth candle, started to snap back, took out the previous red candle, which is starting to show you a reversal trend here. Obviously coming back up to the 20 period moving average, we would have to be cautious of getting rejected here, which it did after hours and started to push lower. But that's besides the point. The point is that if you are always looking for setups, and I'm going to make this clear and as simple as possible, if you short stocks that are breaking below, let's say, because it's on my screen already, the 20 period moving average, then every single day you are looking for a setup with a nice red bar, okay, taking out prior candles price action, okay, confirming 2 candles at least. 1, 2. I'm giving you guys a basic strategy here. What am I looking for? Under the 20 period moving average, taking out 1, 2 prior candles. This is my entry. I click buy. Okay. That's my strategy. Let's just stick with that for the sake of the video. Okay. So for the sake of the video here, that is our strategy. If that is your strategy, then trading is very, very boring. Okay. But there's a difference. There's a difference between trading being boring and taking boredom trades. Now let's rewind a little bit here. Let's say that your MO, your strategy is to go long as soon as a stock breaks above the 20 period moving average. Okay. In this case, Microsoft sold off, had 1, 2, 3 downward candles here. We started to get this reversal pattern. However, if your strategy is to play the breakout over the 20 period moving average, well, guess what? You were never presented an opportunity for a trade. Okay. You were never presented an opportunity for a trade. So you would essentially have been sitting 1, 2, 3, 4, 5, 6, 7 hours that the market was open without taking a trade. Okay. So if you don't have rules and if you don't have a strategy, then you are not a trader. You cannot just buy a stock because it's green. You cannot just short a stock because the candle is red. You have to have a trading strategy. You have to have risk management. You have to have a trading plan with rules. So if that was your strategy to long on a breakout over the 20 period moving average, today would have been a very, very boring day for you on your Microsoft stock. Okay. So with that being said, you could have started to feel a little bit of anxiousness here and here when you started to see this reversal. And you could have said, you know what? We had 1, 2, 3 downward candles here, a lot of selling pressure. Looks like we're having a reversal. You could have bought here, okay, towards the end of the day at 12 o'clock. You could have bought here. However, this next candle, let's say they had some news that came out after hours, and this candle was rejected and started to sell off. Now, would you say that that would be a smart trade to take? Okay. Would that be a smart trade to take? No. One thing, it is not inside your trading plan. It is going against your strategy, and you were simply bored looking for a trade. Okay. So that's the key thing here. If you are taking boredom trades, the market will rip your face off with no remorse whatsoever. Okay. With no remorse whatsoever. Here is a stock that I was looking at here today to the long side. I was long biased on Goldman Sachs. 417 was the area that I was looking for here. It did confirm this 417, however, quickly gave us this tail and immediately sold back off under 417. Next candle opened up and started to move lower. In this scenario here, even though I had a long bias, okay, even though my strategy was looking for a break to the top side, and let's say, for example, that I took this trade on the break of 417, okay? I took the trade according to my plan at 417. It was, however, a fake out, immediately ran 60 cents and started to retrace, okay? Using good risk management, and for me, when I play hourly candles, I'm using my entry candle as my stop. So the entry candle low is my absolute stop. In this case, it's $416.69. Let's just call it 416.60. Okay. If I would have entered this trade at 417 according to my trading plan, it immediately ran up. However, I was expecting follow through. I continued to hold this, and then it started to retrace down on me the next candle. I would have been out of this trade with a 40-cent loss. That's almost break even. Guys, that's a cup of coffee. That's the cost of doing business. The cost of doing business. Now, let's say, for example, let's say you were scrolling through the TV, you were drinking your cup of coffee, you missed this break of 417, okay? You missed this break of 417. By the time you get back to your desk, you see that we did break the pivot of 417. So you said, you know what? We broke that. I haven't taken a trade. It's been 1, 2, 3 hours that the market has been open here. Stock looks good. I'm going to go ahead and jump in here. So you jump in at 416, let's just call it 84. You jump in at 416.84 because, you know, you missed the trade. You were taking the dog for a walk. You were drinking a cup of coffee, but you said to yourself, you know what? My trading plan told me 417 was the area that I was looking at. I was not here in front of my desk at the time, but we broke this. However, even though we are trading below 417, I'm going to take this trade because it's been 1, 2 hours. The market is not really doing too much. I don't really see anything, but you know what? It broke 417. I'm going to go ahead and take this trade. Boom. Boom. Within 2 hours, you would have been down 4 points on your initial buy-in here. This is taking a boredom trade because you said, you know what? I missed this trade. I like the stock. I see that it broke my high. Maybe it's coming back up. The minute you start to say maybe, the minute you say, well, you know, nothing's really going on, but you know, I like this stock. It's coming off 1, 2, 3 hours of, you know, upward pressure. I think there's going to be follow through. Boom, boom. No follow through, immediately rips your face off. So the moral of the story is that if you are constantly looking for the same setups, now you can ask any professional trader, you can ask anybody who has been trading the markets longer than 3 years, longer than 5 years, especially if you're lucky enough, privileged enough to know somebody or talk to somebody who's been in the market 10 years, 20 years. The person I learned from has been trading the markets for over 23 years. Okay. So that's a lot of screen time, a lot of experience that they have trading the markets. If you talk to any experienced trader who's been doing this longer than me, so I've been doing this 5.5 years, anybody who's been doing this longer than 5.5 years, and if you ask them, is trading exciting? Is your blood, flow? Is your heart rate up? Is your blood pumping? Are you getting excited to trade? I can guarantee you that 9 out of those 10 traders will tell you that trading is not exciting, especially if you have a strategy and a strategy that works and a strategy, because trading is a numbers game. It's like throwing darts at a dartboard. You're not always going to hit the bullseye, but the more darts you throw, the closer and closer you're going to get to hitting that bullseye. The bullseye in trading basically means a home run trade where your trade goes 100% according to plan, and it's a home run of a trade. Throwing darts close to the bullseye is, just like taking trade after trade and having winning trades that are profitable. And, when you do miss the bullseye, it is not too far off the board when it comes to, taking your trades. Trading is a numbers game. Not every single setup is going to work. In this case here, this was a complete peekaboo fake out here. However, with good risk management and a trading plan here, it was only a 40-cent loss on the trade. Basically break even loss of a cup of coffee here. On this scenario here, I was looking for a break of the 20 period moving average here. I was looking for 2 previous candles to be taken out here. This, however, at 302.50 to 2 bars down was a 2.5 point move. 40-cent loss here, 2.5 point win here versus, hey, I'm bored. I missed 1, 2, almost 3 hours of the market. Nothing has really shown me anything. However, broke my pivot. Let me just try to take this trade here. It broke. Maybe it's coming back later. Boom. Boom. Big difference between being boring and taking boredom trades. I want you guys to really think about that. Analyze your last 5 trades, your last 10 trades, okay? Analyze them, write them down, go through your broker account and pull them up, back test them. Why did you take those trades? Were you following your trading plan? Was it the setup that you take 9 times out of 10? Or did you take that trade because you were simply bored? Did you take that trade because someone on social media said that they're up 50% today? Did you take that trade on that stock because you did your homework and you've been watching the stock for a couple of days? Or did you take that trade because everybody else on social media is talking about how they made money on that trade? Because everybody else on social media is talking about how they had massive gains, or this particular stock went to the moon, or don't worry guys, hold on for dear life because this stock is the next stock that's ready to blow. I don't care about none of that stuff. I'll trade the same 10 to 15 stocks year in and year out. Those stocks are Microsoft. Those stocks are Facebook, Tesla, Amazon, Zoom, Apple, the triple Qs. I have a stable of stocks that I trade and watch consistently. Of course, I'll sprinkle in things like Goldman Sachs, another swing trade that I was working on here on skills. Okay. I will sprinkle in other stocks. However, I have a core base of stocks that I'm actively watching day in and day out. And all I'm looking for is the same setup, whether that be to the long side or to the short side. In Microsoft's case, I was looking to the downside. Was I looking to take 10, 15 points? Was I looking to go to the moon on Microsoft? Of course not. I'm looking to get in 5 to 10 options contracts. I'm looking to take 1 point, 2 points. Anything more than that to me is a home run. Goldman Sachs, I'm looking to take 50 cents, $1, $1.50 on the move. Did it give me that? No. Did I get stopped out? Yes. Was the loss very, very small? Of course. Was the win on this side greater than the loss on this side? Of course. And that's what happens when you start to become boring. I want you guys all to become very, very boring. Okay. This is not an exciting business. This is, this is the financial markets, the stock markets. It's not very exciting. Okay. We are not saving babies from a burning house. We are not, building homes for the homeless with our bare hands. We are trading price action. We are trading charts, numbers on a screen, bars on a screen. It is very boring. And once you start to understand and you start to simplify your trading process and understand that you're looking for one specific setup on a handful of stocks day in and day out, you will become more consistent. You will start to lose the fear of missing out, feeling the anxiousness will start to go away. Your P&L and portfolio will start to grow, and you will be an overall clear in the head, day in and day out, instead of, Friday session coming to a close and waking up on Saturday and saying, I can't wait for Monday. You are going to exit Friday's session and saying, I'm ready to enjoy my 2-day weekend. And when the markets open back up on Monday, I'm going back to punch in the time clock and look for the same things that I've been looking at. So there's a difference, guys, in taking boredom trades and the stock market being boring and your trades being boring. I want you guys to be boring. I want your setup to hit you in the face. If you guys have to constantly scan through and ask this person, or look to social media, or look to this YouTuber, or look to, ask your buddy what stocks he's trading. If you're running a scanner looking for the biggest gap ups and the biggest gap downs, and you're on StockTwits and on Twitter searching for the hot movers of the day, you're doing too much. You are doing too much. You are looking at everything around you and missing what's in front of you. I want you guys to really let that sink in. But don't let the boringness of the stock market allow you to start taking boredom trades. That's the whole moral of this story. That's the whole moral of the video. But I want you guys to try that. The next 5 trades, I want you guys to really look at your setups. If the setup is not hitting you in the face, and you will know when the stock is hitting you in the face, your setups, meaning your entries, should be clear to you enough to comprehend that, yes, I should be buying in this red bar. I should be buying in this red bar. I should be selling if price action takes out my entry candles high. Okay, in this case, we're shorting. One move down, 2 moves down. It has to be clear to me. I should start to take profits. Maybe here, maybe here, maybe here. Why? Because we are getting super extended, okay, from the moving average. Close to the moving average, boom, big explosion off of the moving average. Start to gap, okay? Bigger gap. 1, 2, 3. You have to start telling yourself here, it has to start clicking that maybe I should start to take profits. Maybe I should start to take profits here. When that starts to become clear to you, you will stop taking boredom trades here because you've seen something pop here. And you will start to, not get destroyed or lose a ton of money on a trade that you should have not been in. So I want you guys to think about that. I want you guys to be boring. If you kind of take a mental note of, let's say your last 2 to 3 winners when it comes to scalping or day trading, on those setups, when you entered that setup, I want you to think back and remember that feeling you had when you entered that setup. That feeling that you had and what you were looking at on the chart should have been very, very clear. And when you got into that play, the stock just it popped and then it started to move higher or move lower, whichever case, whether you were long or short. And, if it was moving higher, you could have moved your stop up, and it just seemed like the trade was easy. Okay. It seemed like everything was seamless. It seemed like the tires had, full air in the tires, and they weren't going flat. It seemed like the gears had plenty of oil in them and everything was, moving smoothly and not grinding. Versus, that when you've taken a trade that you shouldn't have taken, just to take the trade because I haven't taken a trade, if that makes sense. That when you get into those type of trades, that they do not move smoothly and they kind of grinding and inching higher, and then they kind of come back on you, and then you tell yourself, well, maybe it's coming back. And then you tell yourself, well, maybe it'll bounce off this support. Okay. There's a difference. When the stock chart gives you a setup that hits you in the face, that should become boring. All I'm looking for here is a break below 20 period moving average. I'm looking for a break below 20 period moving average. I'm looking to take out 2 previous candles. I'm entering this bar. I'm looking to take profits on the first or the second or the third move. No more than that. You're not looking for 5 bars. You're not looking for 6 bars. You're not looking for 10 bars. You're looking for 1 to 2, 3 if you're lucky. Boom. Okay. 1 bar. Boom. Okay. 2 bars. Boom. Profit taking. I need to start thinking about taking profits. You want to hold a runner? Hold a runner. That's fine. But you better move your stop to break even. So that way, if this trade starts to come back up against you, you know that you're not losing any money and you've already made money on this trade. Boring, boring, boring. You're looking for the same chart patterns. In this case here, what were we looking for? 417 was the break here. Boom, we get the break. Do we get follow through? No. Where is our stop loss? Here. Did it hit our stop loss? Yes. 40-cent loss, 2.5 point gain. 40-cent loss, 2.5 point gain. Guys, when you are boring and you follow your rules and you follow the same strategies, trading will become very, very boring, and it will be more waiting instead of trading. You are waiting for the setup. Boom. Waiting for the setup. Boom. Waiting to take profits. Boom. Waiting to take profits. Here. Boom. Waiting for confirmation. Boom. Waiting for confirmation. No confirmation. Rejection. Boom. Stopped. We are out of the trade. But if you just start saying, hey, this is a fantastic green bar here. This has to go higher. So you enter here, expecting a pop here. Boom, 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 boom. Now you're thinking to yourself, when do I get out? Will it come back? By this time you're down. Let's see what that price was. 415, 413. You're down 2.5 points. Let's say you took a 100 share lot. You're immediately down $250. You get scared. You panic sell here. Next day market recovers and you would have been in the green. You have to look for your strategy. You have to let the chart tell you, let the stock tell you, click the buy button. Do not search for plays. Let the plays find you.